Good morning, everyone. Hey, Bobby, thanks for being here.
Yeah, always love it, man.
All right, anything particular? I'm just going to real quick. Rates are going to go all over the place until the debt ceiling's fixed, and then even when it's fixed, if it's not fixed right, someone's going to be upset. The biggest thing that's controlling rates right now is I think there was 1.18 billion or million or whatever the number was for the Fed took a bought of the mortgage-backed securities from the two banks that went under, SVB and God, I lose my train of thought.
Like I said, there's been a few.
Well, I know Signature, I think it was. So what they're instead of buying our mortgage-backed securities and keeping the rate lower like they did in 21. So in 21 we had inflation, but it didn't affect the rates for a while, and that's because the Fed was buying all the mortgage-backed securities it could get its hands on. Right now, it's dealing with a bunch that it didn't expect to buy. And that's what it's dealing with right now. And so until all that's resolved, they won't be back to the market. Plus, a lot of the banks are selling those to get capital put back in their bank. So because the customers are coming and going, give me my money. I want to move it somewhere else. So that's our issues right now. Till those are resolved, we're not going to see much movement downward in the interest rates.
Yeah, and that's kind of what I want to talk about today, because I did a short little video that I posted to my channels just saying like, hey, sellers, if you've been worried about getting your offer accepted, there are alternatives besides writing a contingent offer, right?
Right.
And so off camera, you and I were talking about bridge loans. So I thought I'd have you kind of fill us in on that since you're the expert.
Well, bridge loans are basically they loan you the money on your house before you need it, right? And there's actually a few different ones. First thing a lot of people don't realize is short-term money is the most expensive money out there because there isn't basically they're going to get paid off short, so they need to get paid up front. And so we'll always talked about the premiums in the market right now because all these mortgage-backed securities that are getting bought, they understand they're going to be paid off within a year to 2 years. So there's a little premium up front for them. That's why rates aren't as low as they should be. So back to your bridge loan. So I've not ever done a bridge loan.
No kidding.
Yeah, because they're once you tell the client how expensive they are, they're like, I don't want to do that. Okay. Yeah. And then there are some other programs where it's called buy before you sell programs. And again, those are based off of someone is buying your house at this rate and this other stuff. You don't have to worry about it. You get the money for your new home and they understand where your house is and they move forward. It's kind of like a bridge loan, but then again, it's expensive money because it's off of the interest rate. I tell people just get an equity line in the meantime. And so somebody like myself, if I do an equity line for you, I won't make any money on it. So there's no early payoff issue.
Gotcha.
You follow me? That's the easiest way. Actually, the easiest way is just have some savings here's another thing to do. If you have a 401k, 403b, or an IRA, borrow the money out of it for 90 days and then pay it back and you won't have a penalty.
Oh, okay.
There's other ways to do it. So you have 90 days once you take money out of a 401k or IRA or, a retirement account to put it back in without a penalty.
Gotcha.
And if anybody thinks I'm wrong, please put it up there and let me know in the comments and we'll make sure we talk about it. I'm just saying in case, I just know that that's how a lot of people do it too. They'll take it out for 30 to 45 days, sell their house and then put it back in.
Yeah. And I know that's just a concern, with people looking to, to do a move up on properties or something like that. It's like, hey, if we have so many competing offers, how am I going to write something that's competitive, right?
Right. And then back to your contingent offer, I've had a few recently that are contingent and they got accepted, which is unusual. So I think it has to do also make sure you work with the right agents, right? Yeah. If you're working with a good agent, they'll know that, hey, I don't care that's contingent. I know it's going to go through. Unless you got a full cash offer, it's not always about the cash. It's it could be just the terms that they like better than something else. Like we can rent it back for 30 days while we're doing this or that.
Yeah.
So you just, we'll work with whatever it is and we'll find the best program that meets with what you're trying to do. Right. Because a lot of people don't want to put their house on the market right now, sell their house and then be shopping for a home. You don't want to do that either. In case they can't find one, right?
Yeah, I guess, but that's why it's contingent, right?
Well, I'm talking about the one that they put their house on the market first.
Yeah,
get an offer, and then they go out and find a place. That happens a lot, though.
Yeah, and it's not impossible. It just means you got to leave some time open for shopping, right?
Right. Well, and then again, you are up against other people who have the money or don't have the money, right? Because your next house could be as little as 5% down. right? You can always buy it. If you can qualify for both houses, then you could buy it and then slowly, get out. And then you can always do that recasting where down the road, after you make 6 payments, you can take that lump sum of money, drop it onto the loan, and have it recasted at the current loan amount at that interest rate for 30 years or whatever's left on the term.
Gotcha.
So there's many ways. And I know a lot of people, if you want to do a bridge loan, just understand it's a little more costly on interest rate. I was talking to somebody and they wanted to assume a veteran's first mortgage on a $400 and some $1,000 house. The first mortgage was $250. They needed a line of credit for $130 or $140. That payment's almost $1,000 a month.
No kidding.
Well, think about it. It's what people don't realize is the prime rate right now is 8.25. You add a margin on that of 2% or more, depending on your FICO score and the LTV. You're already at 10.25. You know what I mean?
So finding those assumable loans isn't necessarily the best.
No, way. And I explained to him, I said, the problem, that sounds great, but the best thing for you to do is probably look at a whole new VA loan and just do the whole thing. And then down the road, do the IRRRLs. I'm talking about the real quick refinances that you can do without any documentation for income and that kind of stuff. VA makes it so easy to refinance. So just be careful. The rate, people don't realize how expensive that money is. But if you only need it for a short period of time, maybe it's not a big deal.
Yeah, I say there's always options, right? There's always a workaround.
Well, the thing is you need to sit with somebody like me and go through the different scenarios and see which is the best scenario for you.
Yeah.
Right. And that's the only way, because numbers don't lie. Other things do. Right. That's how you figure it out. Run the numbers, see what makes more sense, and do that. Because if it's, 10% on, I don't know, say 300,000, what's that? $3,000.
I'm gonna say 3,000.
$3,000. But people are like, what? I gotta pay $3,000 for a few months? Yes.
Yeah.
You pay probably that already to live at your place.
Yeah, with rents these days, right?
Right. Well, so it's all relative. You just have to see what works best for you. Maybe the equity line is the best thing right now before you go shopping, and you have it sitting there ready to go. You follow me?
Yeah, I was gonna say those equity lines aren't cheap either, though, right?
Yeah, but they're only when you pull them.
Yeah.
So, and then you get so if you pulled 300,000 on, you're going to pay interest only the first month, only interest only, no principal. Then you only still owe the principal. So,
and no early prepayment.
No, they sometimes for people like us who actually originate them, we have an early payoff that we have to pay, but usually it's whatever we made on it. That's why I do it without making anything on it.
Gotcha.
That way they can, they don't like it, but what are you going to do?
Yeah.
Yeah.
Well, thanks so much.
All right. Sorry.
No. I appreciate it. Cause it's like, it's good to know that you've never done a bridge loan just because they're too expensive. Right.
Well, everybody I've ever given the opportunity to said that's just too expensive.
Yeah.
Yeah. And they're happy, but remember that's in our area. Now in other areas where it's more expensive and bigger, they do it anyway. It's the only way they're going to be able to get in.
Gotcha.
So, but just understand that I look at the cost, I look at everything so as long as you understand those numbers and are okay with it, then we can do the bridge loan.
Yeah. Perfect. Well, that's always an option. So
yeah, but you have to still understand on the bridge loans, you still have to qualify for all the payments.
Yeah.
Right. So that's the other thing is in today's world, we're back in 2020 and 2021. I'll shut up in a second. I know you have to go today. The issue is back then the rates were so low, you could add on another house and it wouldn't affect you until you sold your house.
Yeah.
Today, those rates are double and that's not the same. So we just need to run the numbers and see what happens and what we can do for you. So that's the only way I can help you.
Okay.
All right. I hope I answered your question.
Always do, man. I appreciate it.
All right. Everybody make it a great day. Thank you for watching. Best thing you can do is go to our YouTube channels and subscribe. All right, Bobby, thanks for being here.
Thank you.
All right. Make it a great day, you guys.